I'm going to go across to Balasubramanian, Managing Director and Chief Executive Officer for Aditya Birla Sun Life AMC. So let's begin with your first take on what Sebi has ruled out. Of course, there will be a reduction in expenses that companies like you charge, but better than what was expected, isn't it?
Yeah, I think what was put out as a consultation paper before and after taking input from the market participants in the entire ecosystem, along with the AMFI Association and individual members, they have moderated the earlier provisions that they had thought about it. As I just explained, the one which has come out has addressed all these representations that was made by the industry players by making adjustments in the total reduction in the expenses, which has now been moderated to the extent it actually has a neutral impact. At the same time, gives some benefit to the investors and also gives a clarity. I think the entire exercise is not just being done only for the reduction of expense, etc. It's being done keeping in mind the statutory the levy that is being charged on various transactions. This is all earlier is used to call as inclusive. Now it become exclusive. Therefore, now is very clear clarity and clear idea of about how each of the charges will be made when charged to the schemes. At the same time, what you mentioned about the brokerage transaction cost. Earlier, there was the expectation of severe cut. It also has been adjusted again, taken into account the ecosystem that is also need to be built along with the mutual fund industry for a better function of the capital market. I think we need to also go beyond the expenses because the circular talks about other things, especially with the digital easing of transactions, as well as allowing new products that mutual fund can be allowed to launch, which is performance-based linked schemes and so on and so forth. It has to go beyond the circular. The master circular has been completely revised.
Sure. Bala, of course, we'll talk about all of those aspects, but I think this morning the focus is going to be on that overarching change, and I hope that you were listening when I was explaining it and that I hit the mark. But having said that, what I'm trying to ask is from a different lens, right? Right now I was talking about it from the lens of the investor. But let me ask from the lens of the AMC and the lens of the broker. Ultimately, the expectation, Bala, is that you as an AMC will pass through some of the expenses to the distribution side. Is that a fair assumption? And how much do you think is appropriate for you to share this increase or rather reduction in what you will earn?
I think the way it was looked at from overall calculation point of view, because there is a 2-3 changes. One is the reduction. Second is keeping the statutory levies outside, and the removal of the 5 basis points, for which Sebi also has given some kind of compensation by way of lesser reduction in the overall expenses. I think if we take all this into account from industry point of view, it will be somewhat neutral to marginal impact, about 1 or 2 basis points kind of things. So it will not go beyond that. As far as the brokerage impact concerns, now that they have made it very clear, BER and the TER, and the brokerage expenses that actually falls outside the basic expense ratio. But however, even today, if I have to look at it, all the transaction costs are being disclosed in the form of turnover. And you mentioned about turnover. There is of course mention in terms of turnover if it goes beyond 1 times. So disclosure already is there. Therefore, it is only continuation of disclosure, except the way it was being disclosed earlier, the way people looked at it. Now there will be a lot more clarity in terms of the breakups. But by the way, as it stands today, I think the initial cut assumption that's coming is neutral to marginal negative. But of course, from investors' point of view, definitely any reduction will consider as a positive for the investor.
Bala, I just want to confirm, right? Because there are a few notes and there are a few calculations, back of the envelope calculations across the board, right? So the larger reductions are for equity schemes that had that exit load because that 5 basis points goes out. And for the rest of the system, there's still a bit of a reduction. But as you pointed out, 1 to 2 basis points, this is for you or for the larger players? You're one of the largest.
For the whole industry, because given the fact the overall asset mix is a mix of equity and fixed income. And in overall basis, I don't think that the impact will be very large.
So you've said 1 to 2 basis points. Basically, it's going to be less than 5 basis points. It could well be lower for the AMC because it's going to be shared, yeah, between the AMC and the distributors.
No, shared in the sense anyway there is a clear formula that exists even today from broader accounting point of view as well as distribution point of view.
Yeah.
Therefore, there is no change in that as such.
Mr. Balasubramanian, Neeraj here, good morning. I guess
Morning, Neeraj.
this is better than what the consultation paper spoke about and therefore marginally bad, but a lot better than what could have been. Is that a fair assessment?
Exactly. I think what was originally came is there is of course I will not say steep reduction, but there was a little of confusion in terms of how it exactly will work out. After doing the math and after making a representation, and I think in Sebi, in all fairness, they made it neutral to both the players. From investors' point of view, of course, a lot more clarity. That's what I think final outcome is. I think we have to also look at the intention. The intention was actually completely revamp the master circular, which has been built over a period of last 30 years. Redundant clauses are there. Therefore, the entire exercise actually is keeping in mind this is the one which I think will go for next, say, many number of years to come. Therefore, you can call it as a master circular 2 or master circular 3.
All right. Bala, thanks so much for joining us this morning and for giving us your views. Pleasure speaking with you as always.
Thank you.
Now, there are several calculations that have already come through, and ultimately each AMC will have to go through these and look through their own schemes and how they will calculate this.